right, welcome back, Algo Learners, to part 3 of our session 3 on moving averages. We're going to create a trading strategy today, a mean reversion trading strategy. And we're going to go ahead and basically create a long and short trading strategy. So without any further ado, let's go ahead to our moving underscore AVG that we've been working on in Blue Shift. And let's go to the slippage model and let's set our spread to a penny. Now, this is spread between bid and ask. Anyway, I could do a whole video, and I will, on slippage models. But for now, let's just keep it at a penny, and this will build a little bit more realism into our back test. We no longer need to print the length of our universe, so let's pound that out. All of this looks fine. Okay, so our research logic, we're not going to need our research logic at this point. So let's go ahead and pound this out. So all I'm doing is coming down here and Control / to pound them out. Yeah, I'm gonna take a look at the market open. Okay, so this is what I want to do at market open. So my idea is basically to at market open, we're gonna do a lot of calculations. We're gonna find basically all the stocks that are above their 200 moving day average. We're gonna calculate the percent that they are in fact above their 200 moving day average, and then we're going to rank these stocks by their percent. We're going to take the highest ones. We're going to take the top 5, and we're going to sell them short. Conversely, we'll also find the stocks that are below their 200 moving day average, and find the greatest percent that they're below it, and we're going to rank them, and we're going to take the top 5 of those, and we're going to buy them long. And so that's going to be our strategy, and we're going to do that right at the market open, and we're going to then hold those positions through market close overnight, and then the next morning when the market opens, we're going to exit out of those positions and then do it all over again. And so if we want to go ahead and exit out of any open positions right at the market open, this is how we actually will accomplish that. And you say, well, you know, when we first start this, we're not going to have any positions, of course, but it's just going to check to see if we have any positions, and if we do have any positions, then it's going to close them out. So this is how we would do it. So if we're going to do an if, basically what you'll see more of kind of an if and then we're going to use a for loop. So if the length context portfolio positions. Now I know we haven't defined this, but this is already defined in the engine for a zip line. So anytime we buy, sell, we have an open position, it's going to be held in this context portfolio positions. It's very important to know. And so if we have, say, 10 positions, well, Len, context portfolio positions will tell us 10. It will return 10. If we have 1 position, it's going to return 1. If we have 0 positions, it will return 0. So if we're just greater than 0, that means we have stocks in our position that we've actually in our portfolio that we've actually, purchased or sold short, and they're there. So if it's greater than 0, then we're going to have a little loop. So we're going to do for the security ID in context portfolio position. So we just want to know what the security, so if there's, whatever the security ID is, we're going to do order target percent. I'm taking that security down to 0. So we're selling all the position. And we're going to print closing, what is it? Close position for SID. So then this will confirm which position we're actually closing. So if we have 10 positions, this will go ahead and this will loop through the 10 different positions, and when it sells them, it will tell us that the position has been closed. It will print that for us. Okay. Past tense, so there's no question that we've closed it out. All right, so that's what we're going to be doing right at the start of the market open. All right, we pounded this out. Okay, so here we go. We're going to create a data frame that's going to hold all the stocks above their SMA. Remember, we have the regular data frame that holds both, but now we're going to go ahead and create a data frame for those that are above their 200 moving day average. And actually, I'm just going to go ahead and call on the other data frame, specifically the column that is above SMA, and if that column shows true, we're going to take that stock and all of its corresponding data in its columns over to the data frame underscore above. And then we can go ahead and let's create a new column. And this column is going to be our percent over the SMA. And so how do we do that? So we're gonna call on the current price. I think that's how I named it. Yep. Current price minus the moving average. We're going to divide it by the moving average. Okay. That will give us our percentage. I do see that I need to do that instead. And we'll just call it the day there. Okay. So good. So now we have that. I am now going to want to create a list, basically a series, and I want to go ahead and get I want to rank. I basically want to rank, and I want to take the top 5 of the highest percentage above the ones that are basically have the highest percentage above their 200 moving day average, the top 5. So we're going to call above trades underscore above. We want to rank this column, and we want to take the largest 5. And so let's go ahead and just print. I'm going to call above trades. So let's just show us the 5. And I want you to see what type this is. All right, let's go ahead and run this. Hopefully I don't have any syntax errors. Let's see, 104. What did I do wrong here? There we go. Forgot the underscore. Okay. See, we're going to make mistakes. And that's okay. That's how we learn. Okay, so going to go to the logs. All right, here we go. All right, so on the 11th of February 2021 at market open at 9:30, we have now we have a ranking of the top 5 stocks that are the highest percentage over their 200 moving day average. And so we can see the first one is almost 91% above its 200 moving day average. And so these are the 5 positions that we're actually going to sell short. And we'll go ahead and program or code the trades in just a second. But I also want you to see that above underscore trades is a series. And so it's a series that basically contains the stocks as well as the percentage over their 200 moving day average. All right, so let's go ahead and do the trade. So for SID, so the security ID, in above underscore trades, the series, I want to know so the index basically is going to be the symbol in those the numbers, basically the security index. So this is basically the index is going to be the securities, the 5 different securities, and so we're going to look for the security ID in the index, and then what we're going to do, we're going to do order target percent, and we're going to do the actual security, and then we're going to do a negative because we want to sell short 0.1. So basically we're going to take 10% of the portfolio and we're going to allocate it to this, and we're going to sell short to this particular security. This is going to loop in 5 times. So we're basically going to allocate 50% of our portfolio because we have these 5 positions, 5 stocks here that we want to sell short. So we're going to allocate 50% of our portfolio to selling them short. Each one's going to get 10%. And I just want to print just so we could see it. Selling short. And then we're just going to put SID just so we can see which position we're selling short. So as this kind of does this for loop here, and once it places this trade, we'll actually see, it will actually prompt us in the logs, and it will say selling short, and it will tell us, TPR is, and then we'll know that the trade has been placed. All right, so let's, now we know our short positions. Let's go after our long positions. So we want to go ahead and create a data frame for stocks below their SMA. And so you can kind of see how this is going to go down. I'm going to basically do it the same way. And then we're going to do below create. But we're going to do, in this one, let's do under. Now, just kind of thinking things through here. Yeah, I'm going to do this. Minus DF below current price. And I think I want to divide that. SMA. Okay, and so now that we have that, let's do our below trades equals DF below. And Where's our column? There's our column that we want to rank and get our top 5 under SMA. And we're going to do the largest percentage below. I'm going to take the 5 top there. And then let's do this. Let's print below trades. And we already know it's going to be a series, so I won't bore you with that. Let me go ahead and pound this one out. So, all right, let me go ahead and also create the trades. So for SID in below trades index, our order target percent security ID. No negative sign because we're not selling short, we're actually buying long. So all you gotta do is just remove the negative sign, and that tells the engine that we are buying long. And so we will print buying long and sit. Okay, so now we're gonna go ahead and place these trades in the back test, and let's go ahead and let's cycle this for a week, or maybe a week and a half, and let's go ahead and see it work in action. All right, let's go. Yeah, why not? Let's go to the 1st of February and let's go ahead and run this. All right, so let's see how this turns out. Oh, syntax errors. Line 55. Let's go to line 55. Oh, okay. Forgot the S. All right, let's try again. One little S can cause all that heartburn. All right, let's see what else. Oh no, we're good. Okay, so it actually ran from February 1st through February 11th. Let's check out the logs. You could see our portfolio went down in value. Benchmark went up. Not very good performance, I must say, for the week and a half for this algorithm. So anyway, let me go ahead and just make sure that things were doing the right thing. So, okay, so now we go to February 1st, 2021, and we could see at 9:30, we got our targets, and then boom, we sold short. And then we also got our buy targets, and then we bought long those targets, and then we closed out our positions at the end of the day. I think what I do want to do as we close out our positions, I think I want to print the I think I want to print. That's interesting how it happened. Oh, okay. Okay. So what I want to do is I actually want to take this print backtest date and I actually want to put it in front of here, because that's why I got confused here for a second, because it looked like I closed out my positions before end of the day, end of the trading day, because of the way that I have this position. So let me change that right now. Let me just go ahead and copy. This won't change our performance, but it's going to be a little less confusing. All right, let's just run it again. So the first thing, as soon as the market opens, it's going to print the date that we're working with as well as the time. Okay, here it is. So here's our date and our time. Of course, we have, you know, on the 1st of February, we just started the algorithm, so we have no open positions, so we're not selling anything or buying anything to close out our positions. And so we immediately go in and we find our targets for selling short. So we found our targets and then we sold them short. Then we found our targets for the long trades and then we bought them long. And then the next day, the very first thing that we did was we closed out all of our open positions. So we held them overnight, closed them out, and then immediately went into identifying our short trades, did our short trades, and then identified our long trades, and then of course we did that. We went ahead and performed our long trades, and then of course the logs just kind of advanced towards the end of our time period. So here we are on the 11th. We're closing our positions out and we're reopening our positions on the targets that we have identified on the 11th. So anyway, so it does work. However, as we look at the performance, not so good. But let's go ahead and take a look at some different time frames. Let's go back to, let's go January 1. Let's go ahead and run it there. So this won't take too much longer, but I'm going to go ahead and then run this, and then we'll run, we'll go back to 2008. We'll go back to August of 2008, and we'll run it, and we'll see what the performance is on the algorithm from here. So the blue line is the performance of our algorithm. The benchmark is SPY. Yeah, and so a couple of things to notice here, that, you know, a drawdown of 22% in a long short portfolio is a pretty stiff drawdown, and not something that I'm getting really excited about. And you can almost see now how the algorithm is very close to the benchmark. A Sharpe ratio of over 1 is really a must. And so if we're under 1 or even near 1, I'm not too excited as well. And so we're seeing that the portfolio value and the benchmark are really close. And the Sharpe ratio fell under 1, and there's quite a bit of a drawdown. Let's go ahead and take a look at, okay, let's do this. Let's go ahead and do a new back test. Let's do a full back test, and let's run it. Let's go back to 2008, and let's do August 1 of 2008. All right, so I'm going to go ahead and run this back test. This is going to take a little bit of time, so I'm going to turn the video off, and then when I come back, we'll have the back test. Okay, so our back tests are finished. Let's go here to the top left, click on back test, and it just gives you a quick snippet here. Sharpe ratio 0.83, cumulative returns are 415%, which is about a 14% per year return. You can see our start date, end date. Let's go ahead and click on the name, and it'll take you to the graphic, and you can see a really good part of this algorithm is just flat for about 10 years. It's really the years on the beginning and in the end that the algorithm performed fairly well. Basically you had the Great Recession with the financial crisis, and then you have here in the pandemic. And so, again, the annual returns, you see the performance metrics over here on the right, just a tick over 14% annually. Volatility is pretty high. Sharp ratio under 1. A drawdown is 22% max. So anyhow, I think we could definitely improve on this algorithm. That will be the topic of the next part 4 of this session 3. And so please join us. Hit the subscribe button to get notice of that future video, and we will work towards enhancing this algorithm. Definitely feel we can do it, and then we'll go from there. So remember, you got this.